That was not legal advice, and that was not tax advice, to be clear. That was also not financial advice. So there's 3 different licenses I don't have.
We don't ever do any of that stuff.
Okay, sorry, guys. That was not real estate advice. That's a 4th license Kendall doesn't have. There are 4 licenses that I don't have, and there's a reason why I don't get those licenses. Hey, guys. Welcome to Season 2, episode whatever the hell we're on. Today, our guest, Josh, at Mortgage Dad of 3, gets deep into the weeds of buying and lending a house for entrepreneurs. So a lot of our discussion is around the people who don't have stable, easy, steady Eddie W-2 income to just go get a loan. And it's also a pretty funny, heady episode. Good luck. Josh has more than 100,000 followers on Instagram because he is a huge nerd at this stuff, so go check him out. So we have Mortgage Dad of 3 in studio, and we were DMing on Instagram, which is a phrase I thought I'd never say in my life, but here we are. And Mortgage Dad of 3, I'm a finance company dad of 5, so I get it.
5.
I got 5. Yep.
Wow.
And so Dustin keeps me young.
I keep you young. Yeah.
We're the same age. We just took very different paths in life. He took a year off to cruise the world for every kid I had. So
True, actually.
it's about accurate.
He did mention he travels a lot.
Yeah, it's a bad habit. It's an expensive habit, but oh my gosh, it changes you as a person. And so does 5 kids. So what can I say?
So I have a question from a mortgage perspective. So
okay.
Not a serious question, but more of a concern or a comment on our social situation in America. This wedding thing where we drop 20 grand on a credit card. How often is that blocking a newlywed from getting pre-qualified for a mortgage?
Talk about a very difficult situation to put yourself into, right? You're going to put yourself in a lot of debt to get married, and you're not buying that house together.
Yeah. So you can have a wedding or you can have a house, white picket fence or, white roses.
Dude,
white
as
dress.
a guy who just got married, well, I guess a year ago, I paid for my wedding cash, and that felt very good. But dear Lord, I would much rather have a house than a wedding because that's over in a day. And
would that cash have been a down payment on a house?
Oh,
Yeah,
definitely. I mean,
Absolutely.
that's a huge down payment for you too.
Yep.
Yeah. Oh,
Yep.
yeah. Oh, my gosh.
One time I needed to fulfill a contract I was under to my parents. I was buying my parents' house. I was 25 or 26. I was consulting after getting laid off from sales as an industry, and I was consulting still within sales and marketing and growth. But 3 months of 1099 income don't get you a mortgage, and I was already on a rent to own contract with my parents. We were already living in the house, and it had a deadline, and so I was like, "Crap! I literally have to go take a slavery job." I was so stressed out in like the sales industry, and it could have been like more cash for me if I leveraged my resume, but it sucked the soul out of my life, which was really bad for my kids. And so I wasn't willing to do it. And I wasn't willing to move, and I wasn't willing to go back on my
Your word with your parents.
to my parents. So the only thing I was willing to, the thinnest thing usually breaks when the pressure builds. And the thinnest thing was Fannie and Freddie. Okay, what are the rules? And I went deep into research mode. It's like, okay, so you're telling me I need
You went down that rabbit hole.
an offer. I need a W-2 offer letter to make this transaction happen. I don't actually have to get my first paycheck.
You don't have to have that pay stub. Yep.
Is that
No.
real?
Yes.
I had no
Yeah.
idea. I thought
Yep.
you needed 2 months
Yeah,
of income, right?
No, and I think
2
that's
years.
So,
but
yeah, everybody likes to talk about rules, right? You have to have 2 years of employment in the same job. You have to have a month's worth of pay stubs. It's not actually true. There are rules that allow you to kind of skate around those. So, for instance, he's in a sales job and he decides to take a W-2 job. He hasn't started working, but it's in sales. and he
Same
gets
industry.
a salary or a W, like he gets salaried or gets hourly, whatever it is. If the employer says in the contract, hey, this person's going to be paid X number of dollars
Yep.
over a 12-month period, that's his qualifying income because it's in the same line of work. And as long as he's been doing sales for the last 2 years, it's believable for an underwriter to say, we will take that as income.
Okay, so how related does it have to be? Can it be pretty loosely related?
I would be lying if I said I haven't gotten some pretty weird stuff relatable in that regards. You know what I mean?
So like sewage, treatment, labor, could be seen as customer service.
Of course.
And,
yeah.
Yep.
I mean, you
You've
just
been in
got
the
to
customer service industry.
You just have to learn how to spin it the right way.
You service a lot of people. I guess that is that is there.
So
That's a tough service job right there.
Yeah.
Oh man. So
Pass.
I feel like one of the worst trade-offs for entrepreneurs, and what kind of makes talking to you interesting, other than I have no idea how your Instagram got so big, and I want to know that.
Bro,
So-
we were talking about it. It's a good
Really?
story. You got to hear it.
Really?
You gotta
I
hear it.
was-
You definitely got to hear it.
Do we want to do that one first?
Yeah, do it.
Yeah, hit me.
Okay.
Yeah,
Yeah,
sure.
why do you have 120,000 followers on Instagram? And is that your biggest channel? I didn't
That
look
is
into
definitely
this.
my biggest channel.
Okay.
The TikTok one's growing a little bit faster right now, but it's a crazy story. So it is something we decided to do probably about a year and a half ago, get really strong and big in social media. So it's me and my mom. She's a boomer, right? I'm a zillennial. We
And
decided that we were going to.
She learned how to use.
So
an
she
app?
learned how to use Instagram, TikTok, you name it. She's learned the different social media channels. She
Whoa.
studies with me. We create content together. She does editing within the app, outside of the app. So she's learned CapCut and some of those other great apps
Yep.
for editing video.
Dude, I don't know. CapCut. This is amazing.
Yeah.
And this was our goal, right? To grow our social media channels, to create edutainment. That's what we like to call it. And provide value for people who don't necessarily understand how mortgages work or how to become a homeowner. So that's kind of why our channel's grown that way.
So was she the impetus behind the whole idea? Was it her saying, "Hey, let's do
No.
this"? It was you.
That was me. That was me going, hey, I know you're looking to retire here in the next 5 to 7 years, but I really think this is important and I really want to focus on it. And I would love your help to be able to do it because I know you have the background to understand a lot of what's going on as far as
was
the
her
tech is
background?
concerned. So she did marketing for title and escrow and a realtor for a couple of years, different times, different places.
Yep.
She started as she was what brought me into the business in 2004. She was a lender. She was a branch manager for a mortgage company. But prior to that, she did, what was it? Software consulting, for a specific software for colleges. And so she really understands, so she started as a CPA, working in a CPA firm when they built the first computer. So the giant computers that filled the room, she actually had to learn by herself how to use one of those.
No.
So she has a pretty
Jealous.
good understanding of computers and tech.
Wow.
So it's pretty cool.
The cards, you like push them in.
Yeah,
Like
yeah.
the
That's
little.
Oh God. Yeah. Yeah.
Oh my god.
We like to refer to her as the unicorn.
That's amazing. What a mom.
Yeah.
That's pretty. Yeah, that's pretty impressive. Okay, and then so you've been doing this for about a year, you said?
So I've been doing social media for about a year. I've been doing loans for over 20 years.
Got it. So on the social media side, has it changed your business significantly, or just
Significantly.
a little bit? Has it
Or
tipped the
at all?
scale?
No, it's significant.
Really?
So this was a brainchild of mine, and it's become the sole center of all of our business. We are working really hard to develop a strategy where it is where we do all of our marketing and all of the media for the company that I work for. We drive thousands of applications for people who want to become a homeowner practically every month.
Yeah.
And it's just people who don't.
Thousands?
We're talking thousands.
Did you say thousands?
So we just did the numbers on it over the last 6
My
months.
man.
6 months, we've done over 6,000 applications for people wanting to.
How
qualify
big
for
is
a
your
home loan.
Whoa.
loan officer?
Right now, there's 3 others that are helping me, kind of filter through them.
Okay.
But it has been kind of a difficult situation trying to figure out how to get through everything and get back to everybody.
Holy cow.
What was it before your social media push? Like
How did I get my business?
How dramatic of a
Oh yeah, I mean,
shift
so
or how the volume of customers and revenue, the whole bit, like how much is it
right.
changed?
So I mean, it's kind of difficult to compare because prior to doing social media, I was considered a top producer in the nation. I did the old song and dance where I chased after real estate agents, worked referrals, did that sort of thing.
Yep.
But when I saw the market getting ready to shift, I realized that market was going to really slow down. There wasn't going to be a lot of local business for me. So I knew I needed to expand nationally. So I partnered with this company who can lend in 49 of 50 states, and grew the social media account so that I can basically reach everybody in the United States. So it was
I love it.
just a balancing act of it.
I used rocketmortgage.com and I also used goodmortgage.com. It's like the Walmart of,
Yes,
of
it is.
mortgages, basically. I also used fsob.com. So I, for sale. Oh, buy owner.
Fizbo.
Fizbo. And they just hooked me up with a broker in my city who would just sign off that I can get on the MLS, and I did it. I mean, I'm on my fifth house, and I'm not the type of person who, maybe it's a trust issue at its core. I don't easily go, here, please take my money and help me. I go, how does that work?
No, and there's a lot of people like you.
Hold
I
on,
mean,
that's
you're a
funny.
solopreneur. You are one of those people who wants to kind of get their hands in everything and make sure that everything's
Well, I'm trying to
taken
not
care
be.
of.
I'm trying to get better.
Nah, you're crazy. I did the exact opposite. I had a friend who was in the industry. I said, I don't really care how you make this work. Can you just make this work? And I'll just sign whatever you need. I don't think I read a
And
single
I'm the
paper.
friend who would have
Which is not
taken your
good.
money.
Yeah,
I'm the
no,
friend.
no.
I would have been like, Dustin, I know how this works.
No,
You don't
I have
actually
better
need a
friends than you.
license.
It's
Right?
perfect.
And he would have
It's
signed
just
up on
true. I call somebody
fizbo.com.
like Josh Dobson.
You're paying me a marketing fee. It's not a commission. I know how it
Yes,
works.
he does.
Yeah, that's fair.
Yep.
That's fair.
Josh, you also, there's some other things that we could nerd out on. So I ran a acquisitions team for $100 million private equity real estate fund that bought, sold, and held first position owner finance paper. And so I ran a team of about 6 and had the relationships with some of the bigger investors in the fund. And that's a whole thing I could nerd out on. We also got a little bit into second position paper because the yields are
A lot higher.
It's gambling, but if you
Yes.
know what you're doing. Yeah, if you know what you're doing though, it can be really fun. It's harder to systemize. So we had quite the system to do nationwide paper buying, and we were one of the biggest buyers in the nation before, because it was a Reg D private equity fund before we slipped up, and the founder slipped up on moved to Mexico basically.
Careful,
with
you
some of our
didn't slip on anything there.
No, I didn't. No, I was the highest ranking person not named in the SEC complaint, the formal
There
SEC
you
You can
go.
still do it.
Right.
I am
You were
clean.
completely
I am
hands
clean.
off.
Yeah, but like I didn't have equity or anything. I just had a salary and I ran the team yeah, that was a whole saga. And
when was that?
Started with some consulting. 2000. I'm gonna get
That's
it
okay.
wrong, but I think it was 2016 to 18.
All right.
Something
Yeah.
like that. Let's see. I also I used to door knock. So before I got into tech sales, I was a door knocker for a loan officer
There you
in
go.
town. So back at right post crash. So this is like 2009.
Yeah, 2009.
2009, I'm literally like for $10 an hour plus commission, knocking on apartment complex doors saying, hey, have you considered that your rent payment could be a mortgage payment and you could own, and I know how to grease the tracks. And I didn't, but I would just lob the lead over to
Door to
the,
door is the greatest way to learn. That sounds like the worst job.
It has to be
it
the
was
worst
terrible.
job on earth.
But cold calls was worse.
Yeah.
I think cold calls was worse for me. Like I actually didn't mind like saying, hi, how are you? Like here's a fruit
It's a lot
basket.
easier to get the phone
Like-
hung up on you than get the door slammed in your face.
Yeah, I slept better when I could get somebody to laugh in person. But getting slammed like phone calls all the time is just demoralizing. It's just like death by 1,000 cuts. I'd rather somebody chop my head off in one fell
Well, you're
swoop.
allowed to do a lot more, right?
That's-
All those phone calls, just follow up with phone call. You have to walk door to door. It's a little bit slower. There's fewer of them.
Oh, it's a lot slower. Oh, it's terrible. It was terrible. No, I got out. I only did that for maybe 3 months, but I did have a hard talk with my wife that was, okay, it's been 10 years and you've had 14 jobs. What's going on?
She did that to you? She had
Yeah.
that. That's great. Oh,
Yeah.
Our wives are similar.
You know what? I've had
Josh,
that conversation before. The wife's looked at me. She's like, "You've changed companies once every 2 years for the last 20 years. Can we stop?"
That's common in
Statistically
real estate,
speaking,
though, isn't
that's
it?
good.
Isn't that pretty common
It's-
in real
it's-
estate? Am I
No,
wrong?
it's
in
really
thinking?
common, but it's hard for somebody who doesn't know a lot about the industry to sit back and be like, "Oh, that's okay. Just change jobs, change companies. That's okay." It's a little difficult for her, and so
Right,
we try to. But she's gotten to a little bit more comfortable.
They
with it.
watch us go through the
Yes.
stress.
Yeah, that's real. Okay, I have a few
Sure.
questions for Mr. Dobson. You are the expert on the call. And you were, I say slacking. I always say slacking for some reason. You were Instagram messaging Mr. Kendall Bachman over here. One question really stood out to me because it really, oh heck, I would do this. Should I take out a mortgage on my house to go start a business, or is that a bad thing to do? If I do it, how should I do it?
That's a
Good
great
move,
question.
bad move? Talk me through it.
So, I mean, it's going to be really depend on your situation. And we talked about risk earlier, right? So it depends on the risk that you're assuming by doing this, because this is your roof over your head. This is where your family's going to live. If you fail and you can't pay your mortgage, you're going to lose your home. So, I mean, that's the first step in evaluating this, making sure you understand the risk,
Depressing.
right? But I do believe it's a great way to do it because the mortgage interest is tax deductible. If you do it right, let's say as a business owner, you are paying your mortgage through your business banking account. That also eliminates the liability from your monthly debt to income ratio. So down the road, let's say you're fairly successful in your business and you're making money and you want to invest in more real estate. You do not have that mortgage counting against you in your debt to income ratio, qualifying for another mortgage, if you're paying it through the business. So there's lots of benefits to it. In all fairness, again, it comes down to each individual circumstance. So I would suggest talking to a professional and figuring out whether or not it's the right fit for you to do it. But if you've got equity and you own a home and you want to start a business and you're confident in the business and the business model is going to work, it's a great way to leverage it and turn it into something that can make you a lot of money.
This is a great answer. I actually feel like you condensed it so well, and I'm a little scared of doing it.
I would like to. I would like to push back.
Okay.
Most people overestimate what they can accomplish in a year, and underestimate what they can accomplish in 10 years. And the problem with starting a lot of businesses with cash instead of bootstrapping is people think the cash will save them time and energy. Like, so they'll spend like this studio built out. We paid like a handyman and an audio, panel builder to do our install and our work here instead of me doing it. But I've done it before and I could have done it. But the difference is we're years into our business and that makes sense for us. But I've done it before because when I'm in hustle mode and I just got to get it done and I don't have the capital to spend it on somebody to help me with the labor, then all the little nuance, even though it takes me energy, it's exhausting. All the nuance I end up getting to obsess over and execute, which de-risks the likelihood that I pull it off the right way the first time. And so I've seen people make this mistake where they think, let's say you're pulling $50K out of your house and you're getting an equity line of credit. People go, I can get my equipment and I can get this, start the website done and the startup off the ground for $50K, which is true, to be fair. But then you're probably going to end up needing more than you pull out. And because it's such a permanent decision you made, I think it's not for most people. I think it would be a better infusion after you started your business.
That's exactly
you figured out what isn't working. Yep. Mm-hmm. And then you use that to plug a hole.
Yeah.
That's
less of startup, more of you've been in it and it's just kind of grown from there.
Okay, that's good. Okay, well, talk to me about time though. Right now, interest rates are what they are. Is this a good time to do it, or would you say no, wait a year, or no, do it now if you're going to do it because it's not getting better?
Yeah. I mean, so
The age-old question.
right, and you're going to hear everybody's got their own opinion, right? And everybody has their own crystal ball. For me, I really believe that it's going to depend on what happens with the economy. I mean, there's a lot of people that are doom and gloom about the economy. People are going to start losing their jobs. And when people start losing their jobs, interest rates are going to have to come down. The Fed's going to have to turn on the printing machine.
Which adds more inflation.
Yeah.
But you would want to be in hard assets.
Yep. And so I think, again, this comes down to kind of where your risk reward is and where you're at financially. If this is a good cash infusion that's going to help you 10x or 5x your income, then why not now, right? But if this is a risky situation where you're counting on making more money and it may not pan out, it is not a great time, just because you're going to be strapping yourself when there's a good chance the economy could be turning the wrong way and putting yourself in a really bad situation.
I had a business idea right here. Dustin, I want you to respond first to the idea. Okay. So because we're in a volatile time, we don't know what the market's going to do. There's a lot of speculation. And most of the speculation agrees that we're in a little bit of hot water, but disagrees on how that plays out, right? I think that the premise is because a home buyer typically stays in the home, 5 to 7 years before selling or moving on. A 30-year mortgage statistically isn't scary. What should be scary, what you should take very seriously is, okay, 7 years or less. How do I envision my life goes over the next 7 years? Because you will have timing, forget about the next 2 years. Depending on what happens in the next span of 7 years, you'll have a tolerance window to make decisions that affect the rest of your life during that time. So if I lock down a house now and the market tanks, but then it's going to do recovery, it's fine on a 7-year horizon, most likely. On a 2-year horizon, I mean, this is just crystal ball speculation. So what if there was an insurance? So the idea is, what if there was an insurance company that would literally insure you against equity loss on a 7-year time horizon? If you end up upside down and needing to liquidate the house, we cover the equity loss, but you pay us monthly for the policy during those 7 years. Because an insurance company is going to be able to do the speculation, the research, the analysis, the math much better than the average person. The average person is going to hear the emotional appeal of, this is a risk mitigation on my 7-year decision-making horizon.
Theoretically, I just don't see how it's possible. Unless the 2008 economic downturn happened again, then it's just, you're not going to be upside down on your house if you don't start out upside down on your house, right? Because if you're making
No, it's possible, because the 2008 one can happen again.
Okay, so you're talking about extreme insurance against like acts of God.
I don't know what news you're listening to, but there's like about 50% of the market that's thinking
2008
this is happening now.
Very unlikely to happen. Although, as Hegel says, history's proven that we don't listen and we don't learn from our mistakes, and it does.
I don't know
repeat
anything
itself.
about Kegels, but I do think that there's a lot.
Josh, I want to hear what you have to
happening.
say about this. I don't have enough information to give you a good thing. I think it's a terrible business idea. I would with you there so much.
Well, actually, I was just thinking to myself, I want to put this podcast and get it over to my buddy Sky. I went to college with him. They're working on a shared equity type program. And I think it would be a decent business decision. And I think, from an insurance perspective, right? The thing you're talking about is that if 2008 happened again, 2008 could definitely happen again. It doesn't mean it's going to happen again. That's why you would have to involve some sort of insurance policy, right? And I think there's plenty of indicators, there's plenty of data that could give somebody a pretty good estimate on what's going to happen. And they could write some sort of policy that is like a mortgage against the home, and make pretty good money, especially since they're paying on it. and not lose a lot of
Cash
money,
flow
right? I mean,
business.
it's an alternative to a mortgage, in my opinion, and an alternative to a second. I think it's a fairly interesting idea, and I wouldn't be surprised if there's not somebody already probably working on something similar to this. Because, like I said, I've got a couple friends that are in the private equity space, and they're working on shared equity type mortgages to help with down payments and all kinds of fun stuff. So,
how much would you charge for something like this? Let's say we have a $300,000 house, and what's your monthly for insurance? Because you want to tell it to the person monthly. You say, hey, and then we'll cover the difference. It's like gap insurance.
My guess is 0.5% of the value of the house per year.
That's
divided by 12. No, it's $130 a month.
Because that is actually just amount like
yeah, no, he nailed that one.
Do I want to buy that?
I gotcha. Nailed it.
Yeah.
So here's let me explain some of the features of this fake product we're describing.
You're starting a bank is what you're doing. You're starting a bank, which
no, I don't deal in overgeneralizations. That's your shtick.
You're pulling cash from people. Like you're literally
Look at Josh's eyes. He's thinking deeply about this.
I know we're all thinking deeply about this. You really got my gears turning on this one.
So let me add some features to this product. Okay. So this is a behind the scenes feature. So let's say Dustin's house goes under and he cashes out on the policy because he wants to move. Now, first thing I would point out is I know as the insurer how difficult it is for you to find another place and actually execute that move while you're selling this house at a loss, and then we're going to cash you the gap, right? So it's a 7-year thing. So if you're at like 6 years, even if that's your situation, chances are you're not going to be able to cash out on this policy. Just life happens, things move slow. So that takes off, let's say 12% of the risk for me as the insurer. Then the chances that your grandparents move or your parents move or your kids move and then you want to chase them and you just start selling the house, but the market's not in a dip, the insurance policy doesn't kick in. The market's not at a dip. Just because you want to short sell your house doesn't mean it's fair to short sell your house. 3, so I would say there's another 15% risk mitigation in there for the insurer. 3, in the policy, we get the option to either pay you out 1.5x the gap over the next 5 years as a note to you. We'll make payments back to you, or 100% within the first 90 days. But we get rights to sell your house, right? So you're getting out of the house. We're going to actually buy the house from you. So it was a $300,000 house. You're selling it for $270 now because the market's down. We've got a $30K liability to you, but I'm going to pay you $45K over the next 5 years. Your install payments are going to cover, the next guy's install payments are going to cover that. So I'm good on cash flow. Finally, I actually have a choice now. I got your $270K house, and I can hold on to it until I know the market's recovering because I have analysts on staff and I'm smarter than the average. Like this insurer is smarter than the average person. And so we're going to hold it and we're going to sell it for $340 while renting it out, cash flowing it the whole freaking time. We will not get right side. We will be right side up on this in almost every scenario unless it happened all at once. In which case we declare bankruptcy, and as everybody on Idea Drop should know, you get one free bankruptcy in American life. It's almost free. And Josh, why don't you walk us through why it's almost free to get one free bankruptcy as an American?
You've put me on the spot, and I don't know this. I'm sorry.
You should know this. Here's why. Because if you are single, you get to protect. It must be like 80K of equity in your home. You can give up every other thing. They'll take every other thing you own, but your primary residence, you get to retain up to like 80K of equity. I don't know what the current number is. If you're married filing jointly, it's double. Let's say 160K of equity. The amount of like middle class people that have 160K equity in their house is very small. So most of us don't even lose the value of our car. We actually just get a year of jubilee, and we like, okay, you took my credit card debt, you took my car debt, you took all my
still got my
debt,
house.
and I still have my equity and my house.
That is very true. Can we go back to the idea really
Uh-oh.
fast? Also, let me put a disclaimer. Don't start a business with bankruptcy in mind. That's a terrible idea.
I'm a risk mitigator galore, man.
Yeah, no, I see it and I get it. And it's that nice thing that you can think of. If everything bad happens, I do have that. But just
Makes
don't
me
think about
braver.
it. Just keep it out of your brain, right? Start a business that you think is going to work.
Stay positive.
Yeah, exactly. Okay, let's say you want to do this. How do we start this business? We're starting this insurance business against houses. Wouldn't you have to be? I feel like the bank would have to start this business, right? I don't know how. You have to get in on the mortgage loan itself. Is that correct? Or
No.
No.
Nope.
I can write you a contract, right? You have a house. You have a house right now. I think you're right side up on it because you bought it a few years back. And, Josh is making you nervous that my equity might slide back. And I'm like, hey, Dustin, it's for you, it's $123 a month for this policy.
Oh, $7.
And in the next 7 years, if the market is down and you have to sell and you need to sell, you want out, we'll cover the gap. And so you'll get out break even on whatever your basis was. And the basis is at the time we sell, we value the house, right? So your value is now. Now, I might say, no, I'm not writing policies right now because actually the market's about to crash, right? So I retain the right to not write this policy. But if we do the deal and I agree to do this insurance deal with you, you're trusting me that I have the cash or the ability to give you that $30K loss or that $70K loss.
I would trust Josh because Josh seems to know a lot of
Yeah,
people.
trust
There's
Josh,
a lot
not
of
you.
deals.
Yeah.
He's got a little bit more cash flow going on.
Don't trust the guy you do the podcast with, right?
No. I've seen
Wow.
how this guy does. He just talks about bankruptcy all day. It's terrible. That's really bad. Okay, Josh, I've got another question for you. I'm going through Actually, I had a few of my own. So
that's okay.
all right, good sir. You go through a lot of people who have a lot of deals. Can you tell me really quick, what is the most common hurdle that people have to overcome to get a house?
Credit.
Really?
Credit.
Okay.
So, I mean, I'll expand on it, right? So, most people, don't know what their credit is. A lot of people,
For real?
yeah, I mean, you'd be shocked, but a lot of it, and I guess it stems from the fact that a lot of the information you get about your credit is actually incorrect as far as the mortgage world's concerned. There's different types of FICO scores. There's different types of scoring models.
Right.
So the mortgage FICO score is completely different than the rest of them.
Don't trust your Capital One little credit report for free.
Don't trust Credit Karma to tell you what your credit score is. So a lot of people feel like they can't qualify for a mortgage to buy a house because of their credit, and they're looking at the wrong information, or they've spoken to the wrong person. I mean, you'd be surprised the number of mortgage companies in the United States who have serious, what we call overlays. They have credit risks, and that credit risk says we will not lend to somebody with a credit score below 620, or 640. And so when somebody talks to somebody like that, they then believe that they have to have a 620 or a 640 credit score to buy a house or qualify for a mortgage to buy a house. And so they give up, instead of working on their credit, or maybe they start working on their credit, but they're working on the wrong things. At the end of the day, they've been given a lot of misinformation. So for me, I would say most people are hesitant or don't buy a house because of their credit.
What is the most shocking loan you've seen somebody get before, where they like that you've heard of from somebody some broker in the industry, and everybody's like, I'm sure you must hear all the crazy stories because you guys talk and nerd out about this stuff. So like, is there a shocking story of like, this guy bought way too much house? I have no idea why that, like, maybe not why, you probably know why, but like, what the heck is our system doing giving this person this much money for that stupid asset?
Yeah. So, I mean, that's a tough one because there's plenty of different stories that could, very well shock you. But So one time we had this gentleman who, self-employed, and filed an amendment to his tax returns, came to us and said, "Hey, I want to buy this house," and gave us his amended tax returns. And as we got into the story, come to find out he had spoken to another lender who had told him he didn't qualify, because his tax returns showed he didn't make enough income. And he went to his CPA, amended his tax returns so that he could make the income he needed to qualify for the, yes.
Oh crap, this is where we're going.
Right? And so he got into a payment agreement with the IRS because, again, in order to qualify for a home loan, we have to verify with a third party that that's your income. The IRS is our third party when you're self-employed. So in order to do that, he needed to have some sort of payment agreement with the IRS to pay off his taxes because he had a huge tax bill.
So he amended them to be high.
Yes. And he
literally
he made 3 payments, right? Because you have to make 3 payments on your payment plan to be eligible to use those tax returns for qualifying income.
Whoa.
And bought the house that on paper, tax returns, looking at his non-amended tax returns, he shouldn't be buying.
Oh my gosh.
But again, I wasn't looking at his bank statements. There probably could have been some other shady businesses he was running that he was making more money than he was reporting to the IRS. But he bought a house and, he shouldn't have been buying the house.
Okay. So let's apply this to the average person who should buy the house because it still is. This is legit.
Yes.
So the example, and I can think of the stories, like some people in our community I'm aware of, some people that we've gotten like messages from online. There are a lot of people who are doing some type of consulting while building a scalable business, right? So it's really common for people to cover their, it's kind of like you don't eat seed. It's not enough carbs. You plant seed, but you also don't plant bread. It gets moldy and dies. You eat the bread, you plant the seed. It's pretty simple. So the basic way to do that is consult, make some money that pays your bills now, and plant for a scalable business. So that can be like 2 part-time jobs that add up to a full-time entrepreneur, and people can actually build their way out of their current day job that way. That creates a scenario where people think incorrectly they've given up their ability to get an asset on Freddie and Fannie, debt, which my belief, my strong conviction is the government is handing out free money when they give you a 4 or 5% loan over 30 years. There is nobody in the world other than the US government that will give that to you. So if you think that is scary and you think that's stressful, and you think that's as commitment oriented as a marriage, you're wrong. You just don't understand. You don't know what you don't know. You don't know that the world is trying to give you financial leverage because that equity, it in our constantly appreciating market, and yes, it also has inflation. So time is really important. Don't squander it. Your asset, which as long as it's an asset that qualifies for Fannie and Freddie,
yes.
Like don't do this on a mobile home. Don't do this on a truck, right? I'm just talking about the asset that qualifies for these programs, which is most single family residences. Take that interest off the table, even at 5% interest, because the interest you're paying is a tax write-off. You're going to pay less in taxes, and the appreciation of the equity in your house is going to wipe out the money you've been paying in your payments the moment you liquidate that thing and sell it. When I was 20 years old and I bought my first house, 2 years later, I sold it for 40 grand profit, and I was able to start my consultancy because I lived off of that 40 grand. Now, I lost that 40 grand to work, and hopefully that work planted seeds that grow into something, which I think it did. So I think everybody should be taking at least one property off the table.
Well, and I think a lot of people
America.
are. Yeah, I think that's what a lot of people are starting to do, and they're starting to realize that they can do. But there is some fear, especially with what they get in the media. But like you said, it's free money.
It's free
regardless
money.
of what interest rate really it is. I mean, yeah, you can start getting some of the higher interest rates. It's not as free, but it's a 30-year mortgage. It's
maybe don't
amortized
pay
over 30 years.
7% if you can't afford it. But if you can afford it, like honestly, it's still not a terrible decision. It's still an asset that will appreciate as long as you're going to hold it, let's say 5 to 10 years. Like, don't do it for a 2-year flip. But so in that scenario where I'm part-time consulting, I'm part-time, building a business that makes no money, actually just has expenses. If I want to get an asset in the meantime, which is actually a better parachute than either of the businesses I'm starting, they are my ceiling, they are my scale, they are my future. But this asset, this house I could get in, it is my parachute. Its equity will be my parachute. And if I want to do both at the same time, what you told us 5 minutes ago before I went on this rabbit trail of context was I can go to the IRS and say, hey, I'm an independent contractor. I have this consultancy. I said I was making $30K a year, but actually I'm making $90K a year and I owe you some taxes. And the IRS says, hey, we have no questions. That sounds great. We would love to tax you on $90K a year. You're like, but I'm out of money. I can't cough up $30K of taxes right now.
Not right now.
Which would probably be roughly the delta if you did that. Maybe 20. And so let's say it's $20K of taxes you owe them. You're saying, well, work out a payment plan. They tend to be 1% interest payment plans with the IRS. There's some nerd data for the audience. That payment plan, nicest people I've ever talked to in the world, by the way. The IRS, like I had to call them for something last year. Yeah. And I had delayed that by 5 years. And I wish I had called them 5 years ago because they were like, hey, it's fine. Like, here's what you need to do. We'll help you. I thought it was going to be awful. And so that's not true. Just call them, get the payment plan. Now I'm making a $200 a month payment to the IRS for what you're saying is 3 months. Then I give those 3 payments, proof of receipts that the IRS has gotten those, or you get them from them. And it shows that I make $90K at the IRS, no matter if the customers paid me that much or not. Then I go get the house off of my $90K income, $300K house. And then I go amend them again. Is that right?
I'm not saying that, but
no, but I'm not saying you should. I'm not. But people have done this.
Dude, okay. You see the problem with all of this?
People have done this,
right? There's loopholes. There's gray areas, but that is one of those things where,
that is crazy.
So the big problem with all of this, and I imagine this is probably, Josh, this is a problem that you run into all the time, is just the ignorance and then the failure to jump over the hurdle of that ignorance. You're like, I actually don't know any of this stuff. Kendall, you sound real smart and stuff, but I don't know how to do that. And so I'm just gonna keep on renting because I don't really know how to do that.
You're gonna DM mortgage dad of 3 is what you're gonna do.
That's exactly what I'm getting at. It's the big issue that a lot of people don't overcome is just the fact that if you don't know, it's okay to ask. And Josh would love to answer your question, I'm sure, because you are an expert in the industry. Probably not about what Kendall was talking about. That sounds a little
Don't do what I said. I was just pointing out people are doing this. This is crazy.
Yes.
This is crazy.
Dude,
I mean, it's tempting. It's if you can do that legally and with your character intact, man, that is wild. I don't know.
No, I think it's interesting. Okay. Josh,
that was not legal advice, and that was not tax advice.
Thank you. Yes.
To be clear. That was also not financial advice. So there's 3 different licenses I don't have.
We don't ever do any of that stuff.
Sorry, guys, that was not real estate advice. That's a 4th license Kendall doesn't have. There are 4 licenses that I don't have. And there's a reason why I don't get those licenses, because you actually can talk about it if you don't get the license.
That's funny. Hey, Josh, are there any, so you've been in the industry for 20 years, right? And you're pretty experienced within it. Are there any like gaps within the industry that are good maybe job opportunities, but also business opportunities that people are just overlooking? Like, hey, this could actually work and there is room for growth in this area, or this is a problem that nobody can seem to overcome easily. And so there might be a good opportunity there. Do any come to your mind?
Yeah, I mean, there's actually hundreds. And I'm sure Kendall can speak to this. The mortgage industry or the banking industry is fairly bloated. It's kind of an old boys club. So the innovation and the, movement towards something better, is not something that they do readily. So there's plenty of different things within this industry that if somebody were to take the bull by the horns, so to speak, they could revolutionize or change kind of how the industry works. It's one of the reasons why we're doing the social media thing. The typical mortgage loan officer, is chasing realtors, and past clients for referrals. But what if that same loan officer could go top of funnel, be the person that everybody comes to for how I'm going to buy a house, how I'm going to become a homeowner, and then distributes that potential customer to a realtor, to an insurance company, so on and so forth.
That's a good
So, that's this part about it that it's kind of blown my mind and what I'm trying to go towards. But yeah, there's other examples of that where the industry is so focused on the old school train of thought. We're going to advertise on radio, we're going to advertise on TV, and we're going to do it the old way. And there's a lot of room for growth.
I'm going to take a stab at the money.
Yeah, go for it.
I'm going to take a stab at the money that a broker makes, and then you can correct me. I don't want to put you on the spot, but
okay.
I'll share from what I remember, and then you can hone me in. But brokers often, between the let's call it their partnership or their boss or whoever holds the license above the broker, the company that they're ultimately doing the loan through, and the person doing the sale, the close, the customer work, it's $3,000 to $6,000 for the average home loan, from what I remember. And is that range still holding up? Is that still true?
It was actually the last 3 years have been the most lucrative, and I think they had peaked at like $6,600, the average loan. But we're starting to see that tail back down a little bit. We're more in the $4,000 to $3,000 range.
Okay.
Which is more normal.
So then if somebody who's 24 years old and smart is listening to this, in order for me to go earn $4,000 a deal, what amount of time do I need to put in to go get credentialed, licensed, and connected to a brokerage who will take me?
Okay,
How long will that take me? If I just I'm going to school or I'm working part-time somewhere, and then the other part-time I'm going to hyper focus on this license.
So in MLS licensing, 8 hours of curriculum required, 7 national, 1 in California. They have other requirements for each state because you can only be licensed in a state, right? You can license in other states, but you have to license in each state. So there's a 1 hour course for California, which is where I'm from, plus a 7 hour national. So you have that curriculum. You have to take the test, which takes an hour out of your day. It's.
I'm not hearing weeks and months here. What are you saying?
No, this is. It doesn't take weeks or months to get into this industry. If you really want to become a loan officer and close loans, I would say it would probably take you a day max, 24 hours
and
total
Dustin,
to do it all.
A day, and Dustin, you could spend the next day, day 2, asking ChatGPT how to be a really good loan officer, and anything you're curious about are the rules. And as you get customers, ask ChatGPT.
Okay,
it's trained.
I love that. I love that. I think you're missing the way bigger opportunity, which is the thing that Josh is already doing. It's just become top of funnel, like literally become the marketing agency for these loan officers or anything like that. Because they're the experts, let them be the experts. You can do both.
I would combine them, because if you can do both, like if you're the marketing agency, you're going to get a lead referral fee that is honestly, it's sketchy. A lot of people won't do those because of licensing and laws. And so you got to combine the execution of the labor itself,
right?
Which you can
house it within the same company is really what you want to do. So for me, it's working with a company that I can build this out in. And we already have the internal loan officers that are going to do all this. So the business is from top of funnel here all the way through in one company. So instead of creating a marketing agency where you're creating the leads to sell the leads, which there's a gazillion of them out there, you're actually doing it at the mortgage company's base.
That's interesting. So it's actually like there are hurdles that you would have to jump through that makes it much harder to outsource it, and it's much better just to do it within. Dude, that makes this industry very interesting.
Yeah.
Very
So, I mean,
interesting indeed.
I'm licensed, right? And so my licensing gives me the ability to have conversations and do things on social media to create edutainment and answer questions for customers. But I also have a team of loan officers that are going to help me when you do your application, get through your application, pre-approve you, get you over to a real estate agent, and get you into a home.
Josh, respect to you, man. That's okay. You found the loophole. It's not a loophole, but you found the gap that needed to be filled, and you filled it really, really well. This is fantastic. This is awesome. I want to do it. I'm going to become a loan officer.
So you were a top closer for a while.
Yes.
Through other means of market. I mean, through the networking method.
Yep.
Which makes you extremely busy. I'm assuming that's where the dad of 3 comment on your tag handle came from, because you're acknowledging basically like I'm doing both.
Right.
How do you juggle those?
Yeah. And I mean, I think for me, so doing this for 20 years, one of the toughest things for me was setting boundaries, because you can get lost in your work. This industry, because people are usually looking to buy houses and looking at houses in the evenings after work on the weekends. Right. So a lot of the conversations that you're having and dealing with a lot of the customer workflow is after hours, not 9 to 5 like a normal job. So you really have to learn to set boundaries and kind of pick what's important to you. And for me, my wife and my 3 kids have been and will always be the most important part of why I do what I do. And so they're the center, and then I grow out from there. So that was the reason for the handle, right? I'm a mortgage dad of 3.
And is it working? Like, so not can you pull this off as a human? Your shift.
It is working
from hustle culture to
it works.
Education resources. It worked.
And I mean, it's amazing when you have a conversation with somebody, up front, right? So a customer who, is going to need a lot of questions answered at different hours of the time. If you set it up front, like, hey, I'm a father. I have 3 children. On the weekends, I'm on the soccer field. You're going to have a tough time getting a hold of me and getting me to do something on the weekends because I'm on the soccer field with my kids because they love soccer and I love soccer. So just so that you understand that, but I will get back to you when I can. But if you set that groundwork, people respect it. And I think that is where we miss it, because the whole hustle culture tells us, hey, you got to be available 24/7, doing this. And yet, if you actually set the expectation with your customer, the person that you're responsible to, if you set those expectations, they respect it. And by respecting it, they respect you, and you can set proper guidelines on how you're going to communicate and how you're going to help them. So it's been a lot of fun doing it. It's hard, because like you said, it is the whole hustle culture. We're all trying to make a buck.
Yeah. Leverage culture is the new way forward.
Yes.
Dude, and it's the scariest when you get momentum, because then you're, I have this going. I have to keep going. I have to keep pushing through. I remember talking to my loan officer. I felt so bad for her. She was awesome. But I remember I asked her point blank. I was like, do you ever not answer the phone? Because you're telling me to call you tonight and it's already 6 p.m. and I don't feel like that's a healthy move. And she said, that's very sweet of you, but everybody else does. So call me tonight. What the heck? I don't think I'd like that kind of lifestyle for too long.
I did talk Dustin's fiance at the time out of becoming a real estate agent.
That's probably.
I don't think I can take credit, but I did push hard for that, and she ended up not doing it.
Yeah, yeah. That is you would have lost your fiance every evening and every weekend. You would have seen her, and you'd have been at work, and you guys would have never seen each other.
Yeah. Okay. Can I ask this, Josh? Why is everybody becoming a real estate agent? I'm kind of over it. I feel bad saying it, but it's like, hey, are you a middle-aged woman? All right, great. Do you have some extra time? Sweet. Now you're a real estate agent.
Are you blonde?
Great.
You think your
Hey,
marketing
it's
is
Stephanie
putting your
from
face
down
on.
the street. She's a real estate agent. I'm going to trust you all of a sudden, even though you haven't done anything besides. Okay, I feel kind of
Just-
harsh saying that, but it's the
just-
trope,
just
right?
look
Why,
at all-
why is it
just-
happening?
Just look at all the TV shows that are on there. HGTV, you name it. There
Oh,
are
yeah.
real life people who they watch and they're like, I can do this. And
You know
it
what?
looks easy. But none of it is ever easy. We all know this from all of our different jobs and doing the different things that we've done.
That's
And
right.
nothing is easy. It's what you put into it is what you get out of it. And again, if you don't hustle and you don't treat it like a full-time job, you will not be successful and you'll be looking for another job very soon.
But if you can combine, I think the earlier discussion was interesting. If you can combine, if you're younger and you can kind of figure out how the social media game is played, and you can combine education and process. I mean, this is what I meant by leverage culture. Like, that's a lot different than you chasing down and texting realtors all the time for referrals, when you can set up the processes, the machine, and then show up to the content, do it really well, and give people what they need to transact with you, which is a feeling of safety. They need information and they need some stuff handled. And so your team handles the stuff. You give them trust and safety and education. That's beautiful to me. And that's great for families.
I love it. I love it. Josh, do you have any final pieces of advice to the listener or to us or to anybody who's becoming an entrepreneur or looking to buy a house? Anything like that?
Well, if you're going to be looking to buy a house, don't start a business right off the bat and expect that to be what gets you to qualify for your home loan.
Good
But
advice.
like Kendall said earlier, take that W-2 job first, buy the house, then become that solopreneur if you're prepared to do that and you're ready to do that. But I think one of the things that we've tried to discuss the most on social media is that home affordability may be an issue. But if you can find a way to become a homeowner, you can leverage that to your benefit over creating generational wealth for your family. So if this is your next step in your life is to build a family, build a business, a good way to do that is to own real estate.
Can we end with an HGTV middle-aged mom business? I've got an idea.
Okay.
Yeah, let's
I got an idea.
Let's hear this.
So the temptation to become a realtor is because what do they want to make? They want to make thousands of dollars at a time by part-time telling people what to do in the beautiful aesthetic of nice homes. That's what everybody wants.
Yep.
Why don't you instead go to the pre-existing people who already can afford the nice homes and are already in them and say, hey, I upgrade beautiful homes to more beautiful homes. And I'm an interior designer with a team. And the process is first I consult with you and then my team comes in and executes, which might include a
Is
handyman.
it just to raise the selling price?
No, this is like because every person with money eventually gets restless and wants their environment to change for the better. And the money's already there. You just have to close them while you're on the doorstep. So if you're good enough to be a realtor, do this instead and go, don't do the work. Do the consult, go through and lend your taste. If they don't like your taste, they won't hire you, so you won't waste the rest of your time. If they do like your taste, they'll pay you, but they won't just pay you for the consult. That's where that's a dumb business. Don't do that business. Consult plus the markup on the labor of the installs, because you'll be doing installs like both in decor and some handyman labor, some craftsmanship, some finish work, and the purchasing of the high-end pieces, right? You're going to go have to pick pieces and invite the customer into that process with you. So I would take them to the store with you. You guys pick pieces, but
No, don't.
They're on
Don't
the
take
clock.
I'm not feeling. I mean, it feels like an interior designer.
That's exactly what it is. It's
it
an
is
interior
an interior
designer.
designer.
Okay, no,
It
the
is an
only way it
interior
would work
designer.
is if
It's
you
just-
built a really, really, really strong brand and people wanted to be associated with your brand.
Social media.
Do the social media thing. Okay, do it for free for your first 5 customers, and then put all that content on your page.
Man, this sounds like a terrible business.
Yeah,
The only way
let's
I would
end
do
with
it,
that.
No. Okay, I'll get you a better one. I'll get you a better one. Let me give you a better one. He already talked about it. Credit Karma doesn't do it for your houses. It's not good enough. But all you have to do is say, hey, we do Credit Karma for homeowners. And so are you looking to buy a house? Our credit score talks directly to that and only to that. And just market it like that. Somebody's going to pay you $10.
I think it exists. And there's rapid rescore tool. I think it exists. It's just now you're
they call it Credit Karma, and he's saying Credit Karma's not good enough. We need something different.
I think there's. I mean,
so
there's
more
home buyer specific ones.
That's the tough conversation, right? So myfico.com is the only place you can actually get your mortgage FICO score from if it's not from a lender. But there are some apps. I partnered with a company called Gravy. And if you sign up on their app, you can pay to get your mortgage FICO score from the app. So there is that does exist. It's there. It's just, yeah.
Are they good? Are they well known?
No, Gravy is very small. It was a partnership that I created because they offered a system for me to kind of keep people in the process with me. So as we're working with them to help improve their credit scores,
it's a nurture process.
Yeah. So the app is really cool because they can track their rent payments. They can do all these things that help improve their credit profile and their mortgage profile. So when they do qualify for a home loan, but as they're doing it in the app, they're earning points. That's a reward system. So they can get rewards points that they can then redeem as a closing cost credit from me when they go to buy their house after they've fixed their credit and they've done all their wonderful things that they needed to do with me to become a homeowner. Idea. So
could I buy a house and get a closing cost credit that is going to pay off my credit card so that we can rapid rescore my FICO before we close?
You cannot use closing cost credits for paying off debt. No.
Okay. All right. Well, I learned a new thing today. Thank you.
You are the most crafty buyer I've ever talked to.
He's working angles.
Right, Josh? Am I wrong in thinking this? He is really.
Hey, he pushes the envelope, right? There's a lot of gray area and loopholes that can be achieved if you just ask the right questions.
I feel passionately about exposing this stuff to the public because, like, I think people just get really down on themselves and they don't push through the critical thinking of like, but maybe the system isn't right. Maybe there's a way for me to like rise above the constraints. And I just don't know.
The system's always a little bit weird. We used to put cocaine in Coca-Cola. I mean, like there are gaps in our system.
Don't just trust the system. Yeah, cocaine and Coca-Cola. Right? You heard it here.
There you go.
That's awesome.
Hey, I have an idea. Let's put cocaine back in Coca-Cola, but only
and it's been a good time with you guys today. It's been great. I'm so happy that we could all be doing that. Remember, don't go bankrupt. Josh Dobson is your hero for everything buying houses, selling houses. Probably not selling houses, but anything house related. You're probably the expert in that areas. Where do people find you, Josh?
I mean, just Google @MortgageData3. You'll find me. And I'm TikTok, Instagram, Facebook, my website, mortgagedata3.com.
And if you're financially illiterate, the chances that you're linguistically illiterate are high. So mortgage has a T in it. Just remember that.
That's great. And if you're not already alienated from listening to the soundbite, go buy a house.
This is fun. I know we're kind of done with the episode, but I would like to add to the repertoire of discussion today. I did buy the highest priced PMI foreclosure. What are those called? You know when Fannie and Freddie takes back a house and then they the lender cashes out on the PMI policy?
Yes.
Mm-hmm.
And then the government now is holding the foreclosure.
Right.
What are those called? In California. I'm in California. So
it's an REO, schedule of real estate. I mean, it's real estate owned.
Yeah, I can't remember which government entity that was.
So it's Fannie Mae, Freddie Mac, FHA, VA, USDA.
It was USDA. This one was USDA. Okay, so it was in our county. It was the highest price USDA foreclosure, which isn't high. It was like
because they have income limits.
$390 ultimately.
Mm-hmm.
Yeah, because they have income limits. So, but $390 was quite high for our area from those income limits because we're pretty rural.
Yeah,
and USDA is almost always rural.
Always rural.
But the auction style prefers an owner occupant, right? So there's a 7-day period during that auction where if you're going to live in the house, you get preference before any investors get to make an offer at the courthouse steps for this foreclosure. But it's not technically at the courthouse, but I I showed myself, this is illegal. Don't do this, but you can do this. I showed myself the house. And it was raining. It was downpouring. There were cobwebs everywhere. I had a screwdriver that helped me get in through the door, is the truth. I ended up buying the house, so I feel clean. So I could have been accused of breaking and entering, but the only people who could have gone after me were the USDA. And I mean, they weren't on site. They were
also on your defense. You were friends with the people who owned the house at the time.
No, the USDA owned the house.
No.
Okay,
USDA owned
California.
His home
it was federal foreclosure.
U.S. Department of Agriculture owned that home.
Yep. So I didn't want to go through the brokerage yet until I was sure I wanted to make an offer, because this is like there's only 7 days to make the offer, and I found out about the house. What is it?
Sight unseen usually.
Sight unseen usually, and I'm not willing to do that. Right? I was just a young hustler, and so I drove to the house. I found it. I was already 5 days into the preferred period, and I was like, crap. If I want to buy this house on a deal, I got to do it in 48 hours. I don't have time to call a broker. I drove over there. I loved it. I drove my wife over there in the rain, broke back in, used a flashlight because the electricity's off, the water's off. There is no way to see this thing pristine. It's not clean. It's however the people who got kicked out left. There was FUCK carved into the concrete.
Holes in the wall.
It had white oak floorboards all throughout a 22-foot vaulted ceiling on a 3,000 square foot house on 5 acres with a 900 square foot shop, and it was gorgeous. It was a 10-foot island granite countertop. This couple had, I learned later, ended up in divorce, and the house was a part of the fight, and they had custom built this thing to the very expensive level, at least for the area, but they were so bad at finish work. There was no way a wealthy person was going to buy it and live in it. And I was like, oh my gosh, this is only owner occupant, but it's above most people's price point for our area. But an investor won't buy this because it's just not
too opulent,
done nicely. It needs to be somebody like me who will finish it. And, so I ended up doing a 7% interest only hard money loan, bridge loan for a year to get cash to offer as a cash preferred owner occupant buyer. And the real estate agent who had to place I told Dustin this 2 weeks ago, the real estate agent who had to place my offer had literally said, yes, I can do that for you. Here's my commission. I was like, no, I'm not paying a full 6% commission on a $400K offer when I did everything. And all you're going to do is enter your license into the auction platform. She said, sorry, do you want to make the offer or do you not want to make the offer? I was like, crap, I have 10 hours left. Yes, I want to make the offer.
I love that move on her end.
Right? The ball's on this chick. And literally she calls me back, tail between her legs. It's like, I can't log in. They won't let me make an account because it's a government website and they're closed on the weekends. Their website is closed on the weekends. And literally she couldn't make an account, which she lied to me, told me she had an account. She told me she'd done this before. She spent her Sunday, we have 6 hours left. She spent her Sunday calling around to find a broker who would be able to actually use an existing account to make an offer because it's a small subset who have this account. And she had to split my way too high commission with the broker she eventually found. But because she eventually found the broker who was listing it for the USDA, he legally cannot give me advice to prefer me over other offers. But it's 1 hour left and I'm on the phone with him. And he goes, I have a bad feeling about that offer. That's what he said.
That's awesome.
And I said, and I was like, does this offer give you a good feeling? Does this, right? And eventually he's like, I'm not saying that offer would win, but I am saying sometimes these things get weird. So if there's a tie on the $1,000 mark, 1,000 plus 100, he's like, for example,
You've been coached.
$390,200 would be safer than the person who knew to add $100 to their 390 and they did 390 100.
But they knew you were going to do that. So
right? So I did 390,000.
Josh, this is a terrible story that should never be aired.
Terrible
is that correct?
No, this is a great story. And I'm going to be honest with you, right? So when it comes to real estate, and this is something because my grandparents were real estate agents for longer than they were real estate agents longer than I've been alive. And the one thing they always told me, it's not about what you know, it's about who you know. So having conversations with listing agents, even if it's your buyer's agent that's having a conversation and knows the listing agent, a lot of the times they can work out a deal that will get you the home. Yes, it's sketchy as far as being ethical.
They will have to follow laws.
They have certain things that they can and can't say, but they do a pretty good job of walking the tight rope, getting you there. So if you really want a house, it's always good to work with somebody who knows a lot of people and who knows how to negotiate with, say, a listing agent.
Here's how that story ended. I made $100,000 a year and a half later selling that house after living in one of the nicest places I've ever lived. My roommate died, my dog died, our neighbors got really mad, and I lost my income, so we had to leave. But we still made $100,000 on that purchase. Anyways, it's been good having you. Thanks again. I don't know if we'll air this last part, but that's hilarious.
Thank you guys for having me. It was a lot of fun.